Welcome to Best of US 2024, and this is the Sunday review of the week of the past. So let's get going. And in this video, you're going to see some different stock ideas that Kerry has that he shared with on the Kerry call, which is a video call on Friday with Tribe members. That's why you need to subscribe so you can hear this kind of stuff more regularly. And also, Mark shares a couple of indications of where this market may be headed and how to trade it in the Platinum call, swing trading call that was on Friday as well. So let's get to it. And first off, let's hit on Kerry's stock ideas for 2024. In this first segment, Kerry reviews how the United States is playing the semiconductor game and how many foundries are actually in the United States. And it's readily available to you and I and some companies you've never heard about that are making a play in semiconductors in the U.S.
What I want to do is periodically kind of give a summary of where I think we're at and where we're going. And I thought I would do it as a part of the stock talk. And in fact, the video that I'm going to do for, I guess, tomorrow morning is going to be this stock talk. And I'm going to go through some things that I think it's important that we take note of because they're going to have some real effects on the rest of the year and how we invest. And whenever I see that I think we should do that, I'm going to do this sort of thing. The first thing I want to talk about is semiconductors. And again, let me figure out where I want to go. Share. And I want to go to this. This is a website you ought to take a note of. It's called semiconductors.org, U.S. Semiconductor Ecosystem Map. I was unaware of this, but all those dots are foundries. All those dots represent foundries, and a foundry in the terms of semiconductors is where they make semiconductors. This is where they have probably one of the ASML machines, and they are printing semiconductors and selling them around the world. I became aware of this as I was doing my research and reading my book. I came across that company, Skywater. Never had heard of it. It's in Minneapolis, Minnesota. It's right down the road from where I used to live in Minneapolis. Then I looked there. Oh my God, they're in Indiana as well, West Lafayette. I suspect that's because Purdue University has a very strong program in semiconductors. And then I went down here to Florida, and there they are there as well. Then I got to reading, and I read that the Biden CHIP Act just awarded $162 billion to a company out of Rhode Island by the name of Macrochips Technology to entice them to beef up and accelerate their chip program. I thought, wow, that's a big deal, $162 million. So I went and I looked at what their revenues were for last year, and their revenues were $8.4 billion. So that 162 represents it. No, that's their revenue. So that represents 2% of their revenues next year. So I guess it's not really that big a deal, but it was press-worthy, and we saw a lot about it. But I want you to recognize that we have a lot of people. Intel is all over the place, and they manufacture semiconductors. Now, what you need to know is Intel is losing their market share. And that is because Intel basically recognized what Steve Jobs and Bill Gates were doing, and that they were making these things called PCs, and they needed a microchip in their PCs to run them. Um, and they captured the market. Then, somewhere in the 2000s, Apple and several other people came out with something called a smartphone. And Intel said, that'll never take off. That'll never be a part of our economy. We're going to stay with PCs. And that's why Intel is now the third largest um, um, chip maker in the world.
So if you're not a platinum member, you're missing out on the Kerry's cheat sheet. And this breaks down all the stocks that he is watching and looking for price entry. In this, he gives you a glimpse of it and gives you an ideas on what companies he's looking at. But most importantly, to know this changes daily. This is updated daily by Kerry so that it can keep members abreast of how Kerry's thinking and the companies he's trying to get into.
I think it's going lower, and I think it's going substantially lower. So I am investing accordingly. Then what I wanted to do today was give you a list of stocks I think you need to be watching very, very closely and tracking and put on your watch list from now through the next 3 months. And on the top of that, I'm going to put SYM. I think the market doesn't realize what these people are doing. This is the Symbotics. This is the company that is making robots with artificial intelligence as fast as they can for Target, Walmart, and Appleton's supermarkets. And they have a backlog of 2 years of orders. Come automate our warehouses. And the stock is giving us some buy-in opportunities. I have a buy-in price, and you'll see that. Let me take you to my other screen. This is my, let me show you this view. Okay, full screen, dismiss. This is my bus 12 and bus 13 portfolios. And as I said, SYM is down here, and I have a buy price on it of $37.86. It's within 12% of that price right now. It's currently at $43.39. This is a stock you want to buy. I need to also tell you, I'm at 80% cash. I went and at Mark's insistence and put stop loss orders as we entered the end of the year on all my stocks. And I got stopped out of most of them. That's a good thing. I'll pay the taxes. I don't care. Another stock you need to keep an eye on is Palantir. Palantir is going down. I have a buy-in price of $13.70. One of the major houses, I think it was Jeffries, just came out today and says I'm overpriced. It's going to go for $12. But Palantir is going to be a major player in the use of artificial intelligence in cybersecurity. Another one I want you to look at is Google. Google is within 5.73% of its support level. Its support level is at 29.52. It's currently selling at 137. I believe I'll buy it at that price. Okay. Then I want to go to one of my favorite stocks, AEHR, who's been getting beat up this past week. And thank you for doing that for us, market. I think I almost bought it, was able to buy it today at $22.15, but it didn't get down to it. The analysts and I believe the fair price on that stock before the year is over will be $60 because they're anticipating their growth in their earnings this year is 77.97%. They will come out with their earnings for the final quarter of on, I believe it's January the 9th. And if you go and look for their revisions in their earnings, they're holding at that. And then they're anticipating a 65% growth in earnings per share. And focus on earnings per share. Do not focus on earnings. I can be AEHR and double my earnings by going and buying my number one competition by issuing more stock. Okay? And by diluting my stock, I may increase my earnings, but that don't mean nothing to you and I because there's twice as many shares out there. That's not what AEHR is, not diluting their earnings. So you always want to track earnings per share, not earnings, not revenue, earnings per share, because the company is in business to make you and I, the stockholders, money. That's why they're in business. Intel, as I showed you on that map, Intel is all over the map for building new foundries. They've got 2 of them going up right outside of Columbus, Ohio, and they've got another one going up in Arizona, I believe it is. They're quite a ways from my buy-in price. Intel, I have a buy-in price of $37.36. They're currently at $46.89. That's where they closed today. But Intel is anticipating a 100.1% growth in their earnings in 2024, followed by a 42% growth in their earnings per share in 2025. This is what you need to focus on. So then the other stock I want you to put on your radar, I don't own it yet, and that is Skywater. This is a company who has a technology that and also understand their market is 90% the U.S. military. Okay, and based on what I just told you about who's going to win the wars in the future, this is a company you want to watch. I'm not ready to buy it. I believe I'll be able to buy it for $5.28 or thereabouts. And I believe it'll go somewhere for up over the next year for $13 to $11.69. That would give it, that's based on a earnings growth in 24, earnings per share, from a negative 32 cents to a positive 11. That's 134% increase in earnings per share. And then they're anticipating in 25 that will go to 72 cents a share, and that's a 554% increase in earnings. This is how you need to analyze stocks. I got an email today from Homer who basically said I needed to look at such and such and such and such in such and such. No, I don't have time for it. Okay. I'm sorry. I'm a neurosurgeon. I'm not going to mess with my wife's leg. Okay. I am going to know more about what's going on in this world of semiconductors, and I'm going to understand what every one of those plants do, and I'm going to follow them to find out what our government has to do to get us in the ball game.
As a part of the Platinum Channel subscription, you also get a list of Watchlist stocks that Mark is swing trading on a weekly basis. In this segment, Mark goes over the past 12 months of returns and wins and losses and breaks down how the year went.
Paper trade portfolio for the year, and I went in and filled it in. We had some holes in it when we had a transition in October. So I went back and I found the data and I filled it in. So this is complete for the year. And you can see we started last December on the 27th with Marathon Corporation and Copart and Visa. You can see when it was listed on the chart. This is just today's price. These are live prices. Okay. This is when we had a sell signal to roll out. These are the profit percentages, time in, real-time profit by dollars, the days in, sell indicators, what caused it to be a sell. Here's our gain and loss per share and our gain and loss per 100 shares. We just assumed we're buying 100 shares at a time to make it equal. So you can see these green indicators are our wins, the reds are our losses. The greens we try to let run up as far as we can go. The reds we try to get out as soon as possible when they start turning negative. So we limit our downside and we increase our upside. And if we have more wins than losses, and we have more upsides than downsides, that's how we work, and that's how this rolls. So you can see over the year, I'll just scroll down, you see the wins and the losses. And you can go on the Discord and see this, it's all updated. But, you know, there were certain times during the year, like here's March, the market was up and you get a lot of wins. And then you get into April and you have the market's not as good. And you can see this is the April trades, and we try to change colors. These are, well, that didn't quite change all the way. Oh well. But you can see May was kind of a tipsy back and forth month. We got into June. Again, June was a pretty good month for the markets. Then July was really pretty good. August, we did well, had some losses, you know, and then September, we didn't do as many trades. And then October came. In October, we did really well up until the point, you know, 27th when it went down. And then here's November, and we closed out December. So the total for, and again, I try to do a week on this. I don't try to overwhelm everyone. I don't want to be chasing 100 different stocks. We just want to focus on a few. So the gains, when you add them all up with our losses, was about, on a paper trade, about $41,600. And we only did about 165 trades, okay? And the win rate was about 78.1%. This, if you were a platinum member all year, this is what you paid, and this was your payback just on a paper trade. And again, we have two other lists that we use too that did pretty well on top of this list here. So the average day in a trade, when you go back, you know, we had somewhere in one, somewhere in, you can see 11 trades. We were about 4.7 days per trade on average. And the average gain, even counting our losses up here, was about 253 a share on average. So 129 wins, 36 losses, 41,000, assuming that we were trading 100 shares each lot. And you can go take a look at that on the Discord and see how we did. Along with, again, other charts that we have. Let me go down and.
It's also on the website as well. So one other element that we're seeing in the S&P 500 is the rollover effect. So far this year, we have seen the S&P 500 end the week in a negative stance, roughly 3% down, I believe. But Mark goes over what you're seeing chart-wise and potentially what to expect.
So let's go look at just what's happening in the regular markets, the broader markets. So this is your S&P 500. And again, we've been watching it. This is through November, December, about to the 12th of December. We had a bounce up. And now you see we're just kind of sliding sideways again and getting to the lower end of our trading pattern. We're following right along the intermediate resistance line. We've now crossed under the 9-day, which we would, as swing traders, get out. We're starting to see the Bollinger Band come together, which means we're in a consolidation phase, which you can see here. Will this thing pop up or down? So we go down to our oscillators. MACD is not looking good. The slow stochastic is not looking good. And we're about it on the momentum indicator, a little over 50. So I got two negatives. I've got a downtrending, a 9-day. We got, looks like we're just at or under the 20 now. Next line down would be the lower Bollinger Band. And then we have basically a support level, intermediate support level, and then the 50. Down below here, we have a lot of gaps that in October or December or November when we popped up, we gapped up, and these normally will get filled, especially on an index. So that's what we're looking at just in the S&P. We look at the Dow Jones, which is 30 stocks. Okay, not so much concentrated in technology, but Apple is a member. You see the same kind of pattern in the S&P, and we're seeing again, riding this intermediate resistance line in a sideways pattern. And this is our second day, third day under the 9. And we're seeing consolidation, the Bollinger Band. We're having trouble getting over the intermediate resistance. You still have an upward sloping longer term 250 day, but again, the MACDs are looking bad. The stochastic is looking bad, and we're still around 62 on the RSI. But the Dow has done better than the S&P and the NASDAQ here lately. We'll go look at the NASDAQ. And here you can see that's actually from where I see a consolidated trading pattern, which is this box. You know, we went up, we hit the intermediate resistance level, and then we started down, and now we're 4 days under the 9. Here's where you'll find some cells again. Well, I'd have to put this below now to see where they are. So we'll go below. Okay, so you see the cells are right above the lower Bollinger Band. So we're still kind of went sideways today, but we're outside of our trading range and heading down. You can see the MACD's down, and the stochastic is just falling apart. And again, Trent and I talked about this. Why might this be happening? And you can go to one stock that has really helped it, and that's Apple. So you can see Apple has been in a downward channel for a while. It's went up, popped above its intermediate resistance, came back down, rode it sideways for a while. And then I think this was the downgrade that they had. You see a big gap. It just continued down. And today we went down, and we're almost, you know, I highlighted this, we're almost at the support level at the 200. If it gets below the 200, it can sustain that. It'll be interesting to see what the rest of the market does and how far down this market could go. Here's where the cells are just above the intermediate support level. So we're getting close. We'll just have to see how it goes. Again, the MACD, stochastic, and even the RSI on Apple are not looking very good these days.
In this segment, Paul asks about where's the best place to get back into Nvidia. And this is where I share with price action versus moving averages and the convergence that is starting to happen with a lot of these Magnificent 7 stocks. So let's check this out.
There's 2 years. Let's see.
Or 2 years.
Or yeah. I can do 5 too.
Okay. So you look at this divergence, this explosion back in what, May of this past year? You know, at some point that gets corrected in a longer term perspective. So possibly using that 200 as your sort of your foundation, it's the basement of your house. You go below your basement, you're pretty much no man's land. So it's at some point it eventually comes together. The price, like this explosion that we've seen in Nvidia over since the first of 23, you know, at some point this will converge because conditions will change at some level. And I think you just be patient, especially if it's a long-term trade. You know,
well, I mean, look at
investment.
Look at right here on your intermediate resistance level right here. Oops. I mean, it comes up, hits, gets above it a little bit down, hits, above it a little bit down, hits. You know, it's just playing right along that, and that's going back to July.
Mm-hmm.
You know,
it's
had
sort
you
of like
gotten in right here, had you got in here, you'd still be, well, you'd be up just a little bit, but you know, that would have been 6 months of sideways to down.
Yeah, and you think about it, like that 200 and that price are now converging on each other. They're getting closer and closer.
Yep.
So it's going to do one of two things. It's going to bounce off the 200 and move higher, or it's going to push through the 200 and head south. And if you just take some economic conditions and where we're at in the world economically, this would be, to me, just be patient. Just wait because you may get that too. You may get that Nvidia around 380 to 300. I mean, 280 to $300.
In closing, there is a lot of great opportunities when it comes to technology stocks, semiconductor stocks, AI, robotics, that kind of thing. But overall, we're seeing a market that is starting to roll over. So better understanding the companies you're looking at buying and capitalizing on when they do start to bottom is the key. And that's what we do at Best of US Investors. We teach you how to read markets, how to find companies that are going to change our world, and when the right time is to buy them, but most importantly, when to sell them. So sign up for the Platinum channel at Best of US Investors. It's www.bus13.ai. That's www.bus13.ai. We look forward to seeing you. Become a subscriber, but most importantly, protect your wealth and create wealth. Do it with us. Live loud. Have a great 2024.